Phase 2 of basic accounting steps to know as an accountant, as a business personnel. Second phase of basic accounting steps to know. We continue. Making adjustment. Making adjustment. What are you to adjust? That is the first question. What are you to adjust? Outstanding expenses. There must be an adjustment of outstanding expenses. How? You are owing someone. If at the end of every accounting period, you must know that these are to be minused from the total money you thought is the value of your business. You must adjust. Remove that value aside from the total value you might be having at the end of every accounting period. Prepare the expenses. What are these prepared expenses? We're talking about making adjustment. These prepared expenses is the expenses you paid in advance. Maybe by mistake, but anyhow, you paid it in advance. That should be included to your capital because it's your money at the end of that particular accounting period. Because you made that expenses even when you have not meet the accounting period of that supposed expenses. It belongs to you at that closing accounting period. But the outstanding expenses is not part of yours because it has not been made. It's still there waiting for you. Then depreciation. Every accounting year period, you must check the wears and tears of your properties, of your assets. You must check of your fixed assets, your machines, your equipment, your furniture and fittings, your vans, your vehicles. All these things that depreciate, you must check their wears and tears and remove a particular percentage of it. After this adjustment, you will be ensured of accurate financial record. After you made this adjustment, you can now ensure of the accurate record that you have at hand at that particular point in time. Next one, prepare financial statement. You are preparing financial statement for you to know the status of the business as at ended. What is this financial statement? Trading profit and loss account. Financial statement is all about profit and loss. Did I make profit or did I make loss? Main report includes income statement, which is the profit or loss account. It helps you to check if you made profit or loss. We call it income statement. Second one is balance sheet, which is the financial position of your business. Balance sheet is your financial position. Because the balance sheet helps you to know your stock value. Then the cash flow. How much cash comes in? How much cash goes out? Then how much cash are we having? How much stock are we having? Did we make progress? Or are we to take decision? Or are we to rethink? That is the implication. Three things: income statement, balance sheet, cash flow. That makes up the financial statement of a business, of an organization. At every accounting period. It's very, very important. Next one is interpret results. You are to interpret the result, or a professional or accountant an auditor there to interpret that result for you. What are they going to do? They are going to analyze the report to the financial users. Who are these financial users? They are individuals, they are business owners, they are government, they are shareholders, etc. That is the essence of that interpretation. That is the essence of that analyzing. The next one, profitability. That is why analyzing, you now find out if there is profit in this business. What are the financial strength of this business? Are we moving forward or are we moving backward? What is the business performance? Did we do well or didn't we, or did we do bad? Where are we having loopholes so that we need to meet up with the requirements? Next one, close the books. You close your books after this analysis. You close the books. Temporary accounts like income and expenses are closed. These are the books that are being closed. The income expenses, the income analysis, the income statement are being closed for the new accounting period, because at the end of the day, you can't have opening balance. It's from this account that was closed. It's from this book that was closed, the income statement, which is being taken care of every month on monthly basis. The examples are at the end of every accounting period. You close these books. You close these books. Simple flow to remember before I call it a day with you. Simple flow. Simple accounting flow to remember. Simple accounting flow to remember. All these stories I have been telling, these are the simple flow to remember. First of all, in transaction. Because account starts with transaction. It's a transaction. Account is a transaction. It's a business language. Transaction. This transaction starts with journal entry, where you use your source documents to acknowledge, to record, to gather information concerning that business. Then you now move to ledger, which is the first account entry. You now move it to the ledger, from transaction to journal, from journal to ledger. From journal, you move to trial balance to check, to investigate if these reports are accurate. From there, you now move to adjustment, where you are now removing those ones that you are owing. Then you add up the ones that are owing you to know the financial status. Then the financial statement, that is where you now analyze. That is where the cash flow comes in, which wrap up the story of the organization accounting. By so doing, beginner's tips for you to know also. I've thought about it before now, but I'm just reminding you the key things to hold at hand as someone that wants to know the foundation of account. Start by mastering debit and the credit rules. It's very, very important. Debit, the receiver, and credit, the giver. Debit and credit rules is very, very important to know. Basic accounts is also very important, which is assets. What do I have? My vehicle, my stock. These are the assets. Liability, capital. Who am I owing? Have I paid tax? Is there any outstanding loan? Unpaid? Then capital, which is your raw cash and your stock items. These are the basic accounts you must bear in mind. Thank you. Till we meet some other time.